Now, the dollar extended its biggest weekly rally versus the euro since January today. Brian Dolan, chief currency strategist at Gain Capital, joins us now to explain why he thinks the dollar is rising and whether it can last. Brian, thanks for coming on the show. What do you think, first of all, about the greenback? I mean, is this a little bit of an unwinding of the carry trade? Is it a rush to safety? What are we looking at here?
Good afternoon, Matt. I think two main drivers of this dollar rebound. One was excessive short dollar positioning going into the start of December. And then the other major driver is the backup in U.S. rates. So the rate differentials have moved in favor of the dollar, and they've taken the dollar out of the rate cellar, and it's relinquished its role as the primary funding currency. So a lot of dollar short covering has taken place. And actually looking ahead, I'm a little bit cautious right now. The dollar's had a pretty nice run over the last 3 weeks, and we're going to look for a little bit more consolidation, a little bit of a stall in the dollar gains in the week ahead.
What about the year ahead? I mean, 2010, does the downward pressure on the dollar remain?
I think the dollar is going to remain soft. I don't think you're going to see it too much, see the euro too much below 140. At the same time, there are enough problems plaguing other major economies, Eurozone, the UK, Japan, that their currencies aren't going to strengthen significantly either. So we're looking at a relatively sort of sideways, muddling through kind of year.
What do you think about the Fed and the Treasury standing behind their strong dollar policy? I mean, is that just jawboning? Does the administration want to see a relatively weak dollar so that we can continue to export?
I think that's the implicit understanding. Larry Summers, in particular, thinks that the weaker dollar helps, the U.S. competitive position, and they're doing everything they can right now to get the U.S. economy functioning on as many cylinders as possible. So obviously, a stronger dollar is not very helpful to them. But then you have we're obviously irritating many of our friends and allies by talking the dollar down and basically ignoring the weakness. So I think that's one of the reasons that we've seen a more significant multi-month dollar bottom. Is
this export-driven recovery strategy, though, a strategy shared by central banks around the world? I mean, it looks like a lot of countries are pushing their currencies down as far as they can.
Well, they're all trying to keep them from strengthening as much as possible. In the U.S., we don't have large enough of an export sector for it to really sustain our economy and push it forward. It does help to stabilize it, but it's not enough to really propel us.
Let me talk to you quickly about gold. You say gold liquidations have begun, but they have not yet begun in earnest. More is likely. Right. Why?
The positioning. We're at record highs in terms of the gold positioning. The main drivers of gold strength are basically a high inflation outlook. We don't think inflation is anywhere on the horizon, certainly not in 2010. And then the other major driver would be pronounced U.S. dollar weakness or other currency weakness. And as we've seen, the dollar has had a pretty nice rebound. I think we put in, again, a multi-month top in gold north of 1,200 and looking for just a further unwind.
No concerns about inflation at all in 2010?
No, not with the slack that's in the economy. I heard your previous guest talking about the improvements in the unemployment rate. I would just mention that I think the unemployment rate is likely to be a misleading indicator in the months ahead. I think we're going to see a pronounced rise in discouraged workers, and that's going to bias the unemployment or mess with the unemployment rate and make it pretty unreliable. What we're looking at today, the jobless claims that came out yesterday, actually, they pointed to a new high, a rise in the number of people on extended benefits and remaining on unemployment. And that does not jive with the so-called drop in the unemployment rate. So keep an eye on that.
Still a pretty grim picture. All right, Brian, thanks for joining us.